Hello, I'm David Morris. The US and China are in a trade war. It's inevitable, right? Well, not necessarily. It may not be so simple. Human beings, after all, are not goldfish. We do have the ability to look back and reflect upon how we got to where we are now. And we also have the ability to look forward and to imagine where we would like to be and how we're going to get there. And so I think it's worth reflecting a little upon how the US and China got to this point, to this tension in the trade relationship. If we go back to the late 1970s, the US and China had just established diplomatic relations in a pragmatic and widely acclaimed brilliant move for the two powers to understand each other and to work together. And at the same time, roughly the same time, at the end of the 1970s, China, of course, entered its economic reform period, its reform and opening up. So opening up China to the opportunities of trade with the outside world, to be open to foreign investment, and to embed China into global value chains, following in many respects the model already set by other East Asian countries, which had also opened themselves up to trade, attracted foreign investment, and become major exporters. Now, each country in Asia had its own model, and China had its own special model. But the interesting thing about the US relationship with China was, from that point, US investment came into China and benefited from low costs in China and from a range of other features of the Chinese economy that made it attractive to American manufacturers to use China as a low-cost manufacturing base for their global markets. And of course, Germans and Japanese and other companies also came to China with the same strategy, to take advantage of China. And also, of course, there was mutual benefit, because the flood of investment, the growth in Chinese exports to the world, helped the Chinese economy to grow so successfully. And China today, of course, is the second biggest economy in the world because of this economic reform process, because of globalization, because of China's deep integration into the global market. The Chinese economy has been very successful. Now, with the US-China relationship, however, there was a developing imbalance that was a problem for a long time. I can remember sitting at a business lunch in Sydney in 2007 with Stephen Roach, the famous Morgan Stanley economist, who said to me then that the US and China had an imbalance in their relationship that was going to be a problem in the future. He also, by the way, at that lunch predicted the global financial crisis. So he's a pretty brilliant man, Stephen Roach. And actually, whatever he says about the Chinese economy is usually worth taking note. His analysis of the imbalance was very interesting, because while the US was busy investing in China and US firms were doing very well, American consumers were busy buying Chinese products on credit. So this huge explosion of debt in the US, which ultimately, of course, led to the financial collapse in 2008, was actually a feature of the US-China relationship, that the US was spending too much and earning too little. A lot of the goods that they were buying were coming from China, so there was a trade imbalance, even though in services the US was doing better than in manufactures. But even so, it meant there was a deep imbalance. China, meanwhile, was earning a lot of foreign exchange, a lot of US dollars, and so was sitting on huge foreign exchange reserves. This put the United States in a difficult position as the world's biggest economy. And at the same time, of course, the US had been hollowing out. It had been losing its middle class. It had been de-industrializing. It had been following an economic model that basically was leading to extremes of wealth and extremes of poverty and a declining middle class. So there was a trend there that was unsustainable for the US. The US needed to do something about it. Now, it had options. It could have decided to actually reinvest in its middle class. It could have decided to reduce its debt and not to have such unsustainable consumption patterns. But as we know, Americans like to spend, and so they didn't address those problems even after the financial crisis. And so the US found itself with this massive deficit in its trade with China. And of course, there's a parallel with Europe as well. The European economies as well found themselves in merchandise trade to also be suffering a deficit. Now, a deficit is not necessarily bad news if everything else balances out. As an Australian, Australia, of course, has for a long, long time enjoyed huge trade surpluses with China. So not every country is running a deficit with China. Some countries are doing very, very well in their trade surpluses with China. That's particularly if they can supply resources and the things that China needs. So here was the problem. By the time of the global financial crisis, the huge shock to American confidence, they had to design an economic strategy to get out of the mess that really they had created for themselves. But who likes to blame themselves for a problem? Well, of course, Donald Trump came along and blamed China. Now, it's true that there were elements of the China-US relationship that were unsustainable, but the trade war is about blame. The trade war is actually throwing away the lessons of the period of globalization, that there are benefits from being open to trade and investment, but at the same time, an important lesson that China has learned is that you need to invest in your middle class. You need to invest in education, you need to invest in job training, you need to be moving up the value chain. So while China was moving up from low value manufacturers to higher value, high technology goods, and also, of course, growing a services economy, while China was doing that, the US was actually disinvesting in its middle class. So, however, the US, we should still point out, is still highly competitive in some sectors. Now, one of those sectors where the US has been highly competitive and has had a very successful innovation system is in technology. But China catching up on technology became the ultimate threat to the United States. And we'll see next time when I discuss about how security got caught up with economics, how technology has become really the centerpiece of the new trade war and part of the geopolitical contest between the US and China.